All right, well then let's do this damn thing. So we've been kicking these off the same way every single time. Introductions. Tell the people who you are and what you do.
Sure. My name is Josh Bobrowsky. I am a serial entrepreneur. Founded a few different companies. The most recent company I was CEO of was a company called Ignitia Office. It was a commercial real estate or co-working business located in New York City. We raised a decent amount of capital for early stage company, something in the neighborhood of about $5 to $6 million for a seed round of investment. And unfortunately, with the outbreak of COVID and a few other things, we were no longer able to continue our business and move forward. So as of right now, I'm working on a few other projects, but just very recently wrapped up that project. And that's kind of where I'm at today.
Right on. Well, when Pat told me to get in touch with you, first off, I know Pat well enough that he doesn't randomly suggest just anybody to me. And after picking his brain and digging into you a bit, my theory of like Pat sententialism is like, it holds true. You're all over the board in like my favorite kind of way. So before we get into things though, are you in New York now? Were you in New York this whole time?
I was in New York and then I left New York City to go kind of more in the suburbs around there. So right now I was in Pittsburgh and then I'm kind of outside of New York at the moment, but I've been back and forth and maintained an apartment there, but no longer in New York.
Okay. Yeah. I just because of how hard it got hit, I was just curious if like you really got locked in there or if you were lucky enough to kind of get out of Dodge for a second.
We were lucky, and when I say we, my girlfriend, myself, we made a decision very, very early on that when the first school closed in New York City that we were going to leave. Like not leave that night, but like leave that day. And we did. And I think that was both like one of the hardest decisions to make, but also I think a very smart decision in retrospect. Just I've heard that it's been challenging for people who've been there. And if you're familiar with New York, apartments are small, even if you spend a lot of money. Still very small apartment that you're going to be
with
living in.
roommates, no less.
Sometimes, yes.
Yeah.
I mean, I didn't personally have roommates, but yeah, I mean, I had an apartment that was less than 600 square feet.
Yeah, I mean, I know people that are there. I know people that have their own place that are small, and I know people that are there that have roommates. And I've heard some stories that it got pretty contentious. Everybody, just being stir crazy alone, but being locked in with people in a small confined space. Of course, you're going to butt heads.
Yeah, I mean, so for anyone that hasn't lived in New York, it's really important to think about. Most of the time, people use their apartment in New York as just a place to go to sleep, where there's so much to do. There are nightclubs, there are bars, restaurants, comedy clubs, like museums, whatever you're passionate about is there. And so when you have roommates under normal circumstances, you might never see them. You might see them for 15 minutes before you go to sleep. But for the most part, the reason why small apartments work really well in New York is you're just out so much. Like you don't spend a New York amount of money on rent to spend time in your apartment. You spend it to be in the city and be around the other people and to have that like amazing vibe that was there prior to COVID.
Right. Yeah. It's kind of like the same concept of like a hostel, like you just put your stuff there and go out and do your thing.
Yeah. I mean, I think that's a great analogy, a hostel, or even if you thought about going on vacation, when you stay at a hotel, whether it's a hostel or a 4-star hotel, you very rarely go to a city or a country to enjoy the hotel itself. Where in Pittsburgh or other cities, you get these beautiful homes for very good prices and you're going to entertain 40 people in your house. And it's just an easier way to spend a lot of time at home when you have a more spacious environment.
Right. Well, let's start to get into the meat of things here. Now is like story time. So I know I'm going to have a bunch of questions for you. But as far as I can piece it together, your professional path is like anything but straightforward. We have plenty of time to work with. I'm not sure exactly where you want to call your starting point, but can you take me on like a deep dive of your entrepreneurial journey that brings us up to where we see you right now?
Yeah, sure. I mean, I think the easiest thing to look at is I started my first company when I was about 17 years old. It was a landscaping business, which was like really just me and a few of my buddies that were doing yard work. And there wasn't very much operational packaging in that. It wasn't structured as a corporation. It was just whatever you would consider to be like the smallest level of bootstrap startup to go from there. I got a psychology degree, I got a law degree. After law school, I opened up a chain of CrossFit gyms, and that's actually how I met Pat. Our CrossFit gyms were pretty successful, had a pretty big online presence, got like a YouTube channel that was associated with them that has about 60 million views on it today. And we really did a great job of marketing and execution. And then probably about 4 years into running the business, it seemed like it was time to exit. Sold the CrossFit gyms, moved forward from there, and took about 6 months to a year off to just kind of travel and relax. Then I was doing some consulting work while I was hanging out in LA. I got recruited by a venture capital firm to help turn around an oil and technology company they had invested about 40 million into. And when I was down in Houston, Texas, I moved from LA to Houston, Texas. I was working on that, and I was also working as a consultant, and I was doing consultant for a legal software as a service firm. And my business partner that I was working with as a consultant on the legal startup, I actually ended up becoming business partners with him on the co-working space. So I was incredibly grateful to have the opportunity to turn around the oil and technology company. It was kind of a short thing. I was there for about a year, give or take, and that actually ended up resulting in us achieving our goal a little bit after I left of, unloading or selling the company, which was really good. But one of the harder decisions that I had to make was when I was working for the oil and tech company, I was making a really good salary. And I was like doubling down in consulting on top of that. So I was legitimately making a multiple of what I'd ever made before. And I decided to kind of take a step back from that and move to New York City with just like a pitch deck, which is like 12 sheets of paper. And I got a Airbnb that was like shared in Brooklyn and just took a flyer, like believed in myself, believed in my co-founder. And we were able to raise one of the largest seed rounds of capital in the United States, which was something in the neighborhood of like $5 to $6 million in 2016. Then we took that money. We did an awesome job of building this co-working space. We were named best office interior design in the world. We were top startups of New York City by Inc. magazine. And you could kind of go down a list of accolades, but you could also look at the functional aspects of the business that were really strong. Like within 6 months of opening, we were profitable. We had
Which is almost unheard of.
Right. So it was really strong. Our profit margins were like gold standard in the industry. We were like looking at like low 30s profit margins, which in the co-working shared space is really fantastic. I don't know if you're familiar, but there was a really big co-working company called WeWork. And
I've heard of it.
Yeah, so WeWork was very similar to the company that I built, except WeWork was a much more valuable company. And I was just halfway through closing a round of capital that put our business somewhere north of $25 million in valuation. I think we were something in the $30+ million valuation. And WeWork collapsed and our round of capital collapsed. So we were going to expand from our first location to our second location. We had a 55,000 square foot location on Park Avenue in Manhattan lined up with one of the largest landowners, and a round of capital fell apart. And that was like kind of tough, but we put the business, kind of back together. We were ready to raise another round of capital in the early stages of the year. and looking to expand into the city, and then COVID hit, or coronavirus, or whatever you want to say. To give you an idea of the drop in capital that we were doing, we went from doing, $130,000 a month in revenue to, kind of year over year, same month. We went from 130 to like $20,000 a month in revenue. So like an 80% loss in capital year over year. And that's just like a huge fault, right? Like, it's not my co-founder's fault, it's not my fault, but you have to deal with the realities of the situation. And so what we did is, and I give my co-founder a lot of credit, is we took like a very high path. We were respectful to our tenants, we were respectful to our investors, we were honest, and we were direct that when we talked to our investors that it didn't seem feasible to turn this around in a short time period because we had this big drop in revenue, and $20,000 was the lowest amount of revenue we had generated except for the second month we were open. So it was like almost our worst month we'd ever had. And there was just like no end in sight. So
was it because your other tenants were also businesses and couldn't maintain? Was that kind of like, was it just basically the cascading effect of COVID?
Well, yeah, it's just a little bit of a vicious cycle where you have very few people are actually going into offices in New York City at the moment, even today, where there's a big work from home push. If you look at Google, if you look at Twitter, if you look at the big companies, even like the Facebooks of the world, they kind of set the social standard, and then the smaller companies tend to take a page from their book and follow suit. So some of our companies that were working out of our office space just were no longer generating any money, and their businesses were having a hard time. Other businesses just had no use to have a 30-person office space. And just to give you an idea of the size of the business that we built, we could fit about 50 companies in our space, and something in the neighborhood of like 200 to 250 people in the space that we had built in New York City. So it was a reasonable sized co-working space, not the biggest, not the smallest. It was about 20,000 square feet. And it was just like a very challenging cycle. And you reach out to these co-founders or CEOs or people that are operating the business, and just everyone's having a hard time, man. Like, there's no loser winner in this. It's like everyone is struggling at some level. And so when July came around, we talked with our investors, and they said if they would invest if we believed in it to kind of get it through the next 6 months or year, or if we weren't sure, then they were okay with that as well. And we were pretty direct. We just said, look, this is outside of our control. We could wake up in a year and be having like the exact same conversation. And the scary thing is the value of real estate and rent is dropping a lot. So you probably have a 20 or 25% drop in revenue. And so kind of back ending into my original numbers, when we were doing awesome, if we were doing like 30% profit margins, there was like a real chance we could get back on track, refill the space, and be doing like at full capacity, like 10% set. Yeah, I mean, like, and that's just not logical. I mean, there's just not a way to return capital to investors. And you always want to present like I think you always want to put yourself in your investor's shoes. And if you don't really strongly believe that you can execute on a return on capital, then you have to be honest and genuine. And we were, and collectively we all worked together and made a decision to widen the business down.
Yeah, I totally get that. There's just no need to, when you find yourself legitimately in a business situation where the action you're about to take is a big gamble, you're already doing the wrong thing.
Sometimes I think it's not wrong if it's a big gamble if everyone's on board with it. And let's say there's like a 1 in 10 chance of it working out. But if it works out, it's 1,000 times return on your investment. That's cool, right? Like, there are a lot of professional investors that are okay with that. But when it's like a bad gamble, right? Like your best case scenario is like a break even. Your worst case scenario is to lose millions of dollars on top of it. Then you got to just be okay with that, because there's risk in every venture at a big level,
Right.
especially in the
Yeah.
early stages.
There's nuance, I guess, to what to the gamble that you can take, and especially if people are on board with it and they're like, see how it plays out, like roll the dice one more time. Yeah, I get that. Um,
And look, over the years, you build a rapport with your investors and you build a trust, right? So if you and I work together for 4 or 5 years, my hope would be in 4 or 5 years, you would realize, you can put a lot of weight into what I say, and I can put a lot of weight into what you say. And that, you know, that lends a lot of credibility, but it comes with a lot of responsibility on the other side, where, in order to, you're so much better off to take a short-term loss, but in the long run, maintain integrity.
right. Well, like at this point, I think we'll probably start to bounce around a little bit, but since we're kind of in the Ignitia realm, so you said it's a co-working space, but there's not exactly, I wouldn't say there's a ton of people in Pittsburgh that exactly know or are working in a co-working space. So can you give people more detail into what that is and the services it offers?
Yeah, at a top level, what you're doing is you're creating a really great office environment that would be analogous to a Google or a Facebook. And our company spends millions of dollars to create this really great build out, to curate high-end coffee, cocktail hours, things of that nature. And then we do that on a large space. Then we make small offices within that space and sublease them out functionally. Well, and it's technically a license from a real estate aspect, but we license out the office spaces. And then the members can, or our clients, are small businesses that can come in and rent month to month or year to year. And by doing that, not only do they like save time, effort, and money of having to build out their own space, which in New York is really, really hard, but they also don't have a huge issue of, I'm going to have to source the internet, I'm going to have to pick up the coffee, I'm going to pay the electric bill. It simplifies their process so that as a founder, you can work on what you're good at and what you should be focused on, which is building your company, and not focus on superfluous coffee, lights, internet, printer. Like everything is just set up. So it's a totally turnkey office experience. And there's a few places that do a nice job in Pittsburgh. You have like Beauty Shop, you have Industrious, you have Alloy 26. I think those are the ones that I know. There may be other really nice ones in Pittsburgh I'm not aware of. I don't live in the city. But those are kind of, if any of the listeners are hearing this and think it sounds good, I would say those are pretty decent offerings in the city of Pittsburgh.
Oh, right on. Well, yeah, and actually, like that's kind of our business model as well, for especially for Some Good Print, but even in our with our like amalgamation that we have with Super Deep Creative, is that we try to take all the things that basically these businesses don't really focus on, that's not their wheelhouse. We try to take that off of their plate so that they can focus on exactly what they do, and we get to just be their creative partner. So it kind of takes all of that, like that trial and error, the guesswork, the whatever, like everything that's not their strong suit, and try to remove that from the equation so that they can just focus on the things that they're really good at with their business. And then we're both kind of now firing on all cylinders because we are good at the creative side. We are good at, we have the knowledge in the print end and in the creative end to be able to drive them in the right directions for whatever they need. And then they get to just operate in whatever they're great at doing.
Yeah, I think that's incredibly important. Basically, any company that's under, call it 50 people, they should have a core competency that they're incredibly strong in, which is their main business function. hypothetically, I'll say a bakery, just to keep things really simplistic. And a bakery's goal should be creating really high quality baked goods. And for someone like that, it would make a lot of sense while they're in the smaller stages of their organization to be outsourcing their print work to some good print, to be outsourcing their accounting work, to be outsourcing their legal work, because that way they can focus on the baking. Now, obviously, if that company becomes a Goliath in the industry and you're talking about, like the companies that are making Hostess or, huge billion-dollar companies, as you grow, you bring more services in-house, but very similar to real estate as well. A big company like a Facebook is probably going to build their own office space. But at smaller scale, companies should really specialize and focus or triple down on what they're good at and try to outsource things that they're not. So yes, very similar.
Yeah, 100%. I kind of want to bounce around a little bit more. So we live in a litigious world. Everywhere you look, like take pro sports, for instance, like the league commissioner isn't an ex-owner, ex-player, or like a union organizer. They're lawyers. So like, how has your law school background helped you navigate the business world?
Well, I think that it's been helpful, right? And there's twofold. One, I have a acceptable understanding of contracts, negotiations, going through leases. And I think a really big thing is very early in my career, it lent a lot of credibility to me being a good operator or intelligent, because having the CrossFit gyms, I think we did a great job with them. But your natural inclination of somebody who owns a gym or a couple gyms might not be that they're the most like nuanced entrepreneur, might not be that they're the most like business savvy individual. And I'm not saying that I even was at the time, but I think having that law degree kind of allowed me to step into my next roles, which were a bit, I think you would say, higher level. And that lent a lot of credibility. So that having that law degree got me the consulting position with the guy that ended up being my business partner, right? Because he had a software as a service legal tech firm. But even if you don't have a law degree, I think it's super important in business that like you're looking over all of your contracts, and anyone can really learn a lot about law just by going through Google, right? Like 30, 40 years ago, this wasn't the case, but like for you, if you were like needing to negotiate some contract, like sure, you hope your attorney does a great job. Like I hope my attorneys do a great job. I'm always going to double check the important work. And I would recommend any kind of owner to be doing the same. But yeah, it was helpful. We live in a litigious world, but realistically, like the best in-house attorneys are going to like help you avoid litigation, because it's so much better just to not have to deal with like a lawsuit if you can.
Amen to that. Speaking of CrossFit gyms, so would you classify that as like as just like an investment opportunity based on like the current fitness trends at the time, a passion project, or like maybe a mix of the two?
I was never incredibly passionate about CrossFit, but I did see the benefits that came with it, where there was a cool dynamic to combine a competitive sport with generalized fitness. I think that they really hit on something like, so Greg Glassman really did that well, but I think it was good timing to start that gym in 2010. And I think it was equally good timing to, take a step away from that gym in 2014. Not to say anything against anyone who owns a CrossFit gym today. There are a ton of people that do really well with that. But I think for myself personally, I think it was a good timeline to step in and step out. But I was never like a really, really diehard CrossFitter personally.
Right on. Yeah, I that always it's always an interest to me just to see if people are trying to, if they're like just kind of seeing the signs and they get in whenever it's good, and then they know when to get out, which you kind of said you saw the signs, you knew when it was time to like step away from the CrossFit gyms and move on. So I was very curious to see like, why did you get in?
I think really my co-founder at the time, right?
Yeah.
He was really big on it, and he had been doing it a few months before. We had known each other for like, I don't know, 10 years prior to starting that business. And it was really his idea. But once he kind of explained to me about the game theory dynamics of it, I agreed that it was like a hot trend or a trajectory. And tracking back to that business, I was probably more on the business marketing kind of business side, and he was a little bit more of the trainer or the face of the business. And that ended up being a good pairing in a lot of senses. But yeah, I don't think it was something where I was ever like, like I can't wait to do CrossFit. But I also understood and respected that it was a good business as well, and that it was helping people, and it was, it had a lot of good attributes to it.
Yeah. So another pivot that I want to take is in the, like, whenever Pat brought me up to you, I dug into you real quick. And I mean, like, I don't mean like I took a little bit of time to dig into you. I mean, like, he said your name and then I was on your LinkedIn page.
Sure.
And so LinkedIn, you are highly interactive on that platform. And from what I can deduce, like, incredibly successful at it. How do you navigate that platform to leverage the most value possible out of it for yourself? I think a lot of people don't use LinkedIn either how they should or enough at all.
My biggest thing is trying to get to know interesting people. And if you come from that perspective, it gets a lot easier to go from there. I will probably do some form of mentorship with somebody new once to twice a week, where somebody who's younger, just starting out in their career, mostly in the entrepreneurial space, because that's where my experience is. But I'll do like mentorship with people and like give them guidance and like try to do that with like one or two people a week. And then I'll connect with other people, whether it's like a Harvard professor or a fellow CEO, and just try to be very genuine and try to find value. And I think that if you're genuine, bring value, and come from a positive place, you'll probably have a pretty good impact with the people that you interact with. And that's kind of my sentiment. I just started using a platform maybe about 4 months ago. And before that, I was always kind of like nervous to use it, but I just started getting into it. And the more I worked with it, the better it got. And, I've been on different podcasts from it. I've been on vlogcasts. I feel like it's a lot of fun. I mean, I just think it's a good place to interact. But I would say never add somebody as a friend on LinkedIn and then like pitch them immediately your sales pitch of your company. If you do that, you instantly turn the dynamic from a human relationship to a consumer and a salesperson, and that just kind of sours people right out of the gates.
Right. And that happens. I mean, I'm pretty passive on it, and definitely trying to change that, because for years I've been saying I see value in that platform. And of course it's so hypocritical of me to then never act on it. But the things that end up in my inbox from LinkedIn are kind of absurd. Like they don't even know they didn't even like get to say hello and have an interaction with me before, like they're really laying on whatever they're trying to like sell me on, whatever, like master class or like some sort of enrollment thing, or if they want me to check out some sort of a presentation or whatever, they just go right in for the kill. And it's like wine and dine me just like a little bit,
Yeah, no, I mean, I think that's probably the biggest wrong that people do on LinkedIn is they don't do any research. So like I give you a lot of credit where you went out and did research and you've got an idea on my background. And I'm not saying that you took, or that someone would have to take 5 hours to do research, but you could go on LinkedIn and Google and spend 20 minutes and get a decent idea as to what I'm involved in at the moment. And I'll get people emailing me on LinkedIn saying you own a landscaping company, which I used to own a landscaping company when I was 17, but it's pretty clear I don't do that now. I'll get people, just these cold emails that are 400 words and 8 paragraphs of like talking about how good their company is at social media and how, they should represent it. That stuff's not good. Just being yourself, being genuine, connecting with other individuals, and figure out. I also think it's helpful if you kind of stick with like maybe 3 categories that you're really strong and knowledgeable and can be helpful in. So if you're doing like, if you're talking to people about podcasts and you're talking about business and then you're talking about graphic design, right? That's going to resonate. And if you're talking about graphic design and I see that, I'm going to be very interested to respond to you on that. And I just think staying away from things that get people very emotional is also a good idea. But personally, like, I'm not a hugely emotional guy, but it's a very tense time. And a lot of people are on LinkedIn as a social media platform just for professional reasons. I think just kind of keeping very neutral is important as well.
Yeah, that's actually kind of funny that you bring that up because it's a stark difference from like say Twitter and Facebook, just the different type of content that's on there, but the ability that LinkedIn, which I believe is owned by Microsoft, that they've been able to really keep it in that lane and not let it get so infiltrated by like whatever the politics are of the moment and like, just whatever triggering thing will set somebody off. It has really kept that that business aspect to it, that professional aspect to it, which I appreciate. I mean, I get a lot of business information from there, which is easy to do because it's not cluttered up with all that other nonsense.
Well, there are some things that help with that as like a virtuous cycle, right? There's a lack of anonymity. So on Twitter, I could create a name that might not be tied to me personally. And when you create anonymity, people become a bit less polite than they would be. When you have your name tied to something, you have a little bit more accountability with your words and actions. Probably not as much as you would have in person, but there's some higher levels of accountability. When you couple that with the fact that you not only have your name and your face tied to your actions, but your coworkers are now tied to your actions, and it's very directly linked, where even on Facebook, I'll know people that will kind of change their name a little bit and keep it a little private so that their boss might not see them on there. That's not the case on LinkedIn. So you have multiple levels of accountability to where I think that helps people just be a little bit more positive because you feel like your name is tied to it. And then also professionally, your colleagues or your coworkers are going to be, or your boss is going to be kind of viewing your content on there. So I think that helps people stick with the ethos of the platform, which is to be professional and to be your best version of yourself.
Yeah, I mean, I think everybody would agree with that because immediately when you think of anonymity, you think of the eggshell icons on Twitter that like go crazy on people, and they're like no longer even a person really. It's just like kind of this character that has nothing but like animus towards everybody. So yeah, that's 100%. I'm on board with that 100%. So another crazy pivot because at this point there's like no direct path towards anything.
Sure. Yeah.
But venture capital. I hear about this world in podcasts mostly, but it's more of like a glossing over as a stage between like concept entity to like the mature business. So what is it like inside the world of like venture capital?
So venture capital or access to capital, or however you want to describe it, it's so diverse. And no, let me rephrase that. The experience that you could have can be very different from one person to another. So you could have a experience with one person where they're totally like a jerk and they are hard to deal with and there's a high level of arrogance. You could have another interaction with somebody who's filled with empathy and kindness and generosity. The overarching theme is everybody wants to invest money in order to get a positive return on investment. every ecosystem has its own style of venture capital. So the venture capital scene in Pittsburgh is very, very different than the venture capital scene in New York City, which is also very different than the venture capital scene in San Francisco. So I could speak much better on New York and Pittsburgh because I've been in those two cities. I understand them. And I know about San Francisco, but I've never raised any personal capital or professional capital from there yet. But I would say the world of venture capital is a place where you have to find people that are kind of like-minded. And that means if your company is like an agricultural technology company, right? Like you have some special hydroponic growth for strawberries, you're going to want to find venture capitalists that invest in early stage agro-tech companies. And it's cool because you'll get to find people that are passionate about what you're passionate about in the best of worlds. In other senses, it can be challenging because it's like you're constantly applying for a job when you're raising funds. Like you're constantly reaching out to people that have capital and you're trying to explain to them why your business will be more valuable tomorrow than it is today. And so there's goods and bads to it. Some people love raising funds, some people hate it. It's normally kind of challenging. But there's so many different ways that venture capitalists can interact. And there's also a lot of ways that you can raise funds that are very different as well.
Right on. Yeah, I've never had to obviously I haven't ventured into the world at all, but yeah, I just always hear that being brought into the conversation whenever they're talking about building a business, but it doesn't seem to be, nobody seems to go into it in very much detail. And I was just always very curious, and obviously having somebody in front of me right now that's like been in the world, I just had to ask.
Sure. So very simplistically, you're going to have an idea or a company or something in between, depending on what stage of capital you're going to raise. In the very, very inception, you have what's called seed capital, which seed capital is probably for most people less than $500,000 of investment. And that is where your like earliest stage investors come in. Often that seed round is friends, family, your rich uncle, Rick, or your rich aunt, Jamie, whoever you have money to get from. After that, you have your series seed round, Series A, Series B, Series C, Series D, and then, an initial public offering or taking a company public. Each round of capital is normally like about 3 times as big or bigger than the previous round. So if you raised a seed round of $500,000, you might raise a Series A of $2 million. And every time you raise a round of capital, the value of your company typically goes up as a multiple as well. So if you had a company and it was worth $10 million today, and you got $5 million of investment, your company would then be worth $15 million post money. And for the $5 million, the investor would get 1/3 of your company, because 5 over 15 is 33.33% repeating. And that's the very, very, very basics of venture capital, but there's so many nuances of voting rights and common stock, preferred stock, liquidation preferences. And like you and I could spend a 5-hour episode diving down this rabbit hole. But at the end of the day,
we can do that.
Yeah. Most investors, in my opinion, value one or two things, which is control and percentage of the company that they have. And those two can be the same or they can be different. So there are control provisions that we could draft up. If I invested $1 million in some good print, where I might have the ability to veto certain sales of the company. I might be on your board of directors, and I might have some sort of, provisional control votes that, I make certain decisions. I might be able to, a liquidation preference for somebody who doesn't understand that would mean I might put a provision in that I get twice my money back before any other investor gets any money. And there's like 1,000 things that you can go down this. But as a founder, you might care a lot about control. So you might give up 70% of your company, but you might install a 10x voting right. So even though from a financial perspective, you only own 30%, from a control perspective, you might be able to still control the company. And so kind of going down that rabbit hole, there are an insane amount of things that could be variables in this. And what you want to realize is anybody who comes on board as an investor is really a lifelong partner in your organization. And you need to get along with them. You need to share a vision as well. And when I went back to like someone who invests in agri-tech in my previous example, I would say the same thing is true for when you expect to return your money and how much money you expect to return to them. So again, if I invested $1 million in some good print, if your plan is to get to a place to generate $10 million a year in profit, and I'll own a third of the company, and in a best case scenario, you're going to pay me $3 million a year from now until when you shut the business down. That's one level of expectation. I might expect my first profitable check to come into me in 2 years. Alternatively, you might say, Josh, our goal is to make it really, really big and to get to $1 billion valuation and do an initial public offering, which on the New York stock market. And in that scenario, we want to be like Canva, which is just this huge company, but you have to realize that your investment at this early stage will not be paid back for 5 to 10 years. And as an investor and as an entrepreneur, you should be upfront with what your expectations are, because the last thing you want to do is have me wanting to get money back in 6 months and your expectation is it's going to be 7 years, where neither of us are going to be happy in that scenario.
I don't have anything to add to that. I think that was like a really great a really great rounded out scope of what venture capitalism looks like. Now that we're talking about it, because you keep bringing in the idea of investors and everything like that, you just sound to me like you are very well invested yourself, and you don't have to say exactly how much money you have anywhere, but I'm very curious because the market it doesn't exactly reflect the state of the game as far as everything is concerned with unemployment and whatnot. But if you are invested right now, what are you looking at? What are you thinking is what's the area that you feel comfortable putting your money in these days?
For me, I'm not a professional stock analyst. I'm a professional entrepreneur.
Yeah.
So anything that
outsourced,
I say,
right?
Yeah, outsourced. Anything that I say should really be taken with a grain of salt, where I wouldn't take my advice on what plays you should or shouldn't make in the stock market, because that's not where I have an expertise.
Yeah, this is a solid disclaimer. I like
it. Yeah, no. I mean, that's what I think you want to look at when you look at addressing what you're seeing, which is this huge divergence of unemployment and small business and what's going on the street versus what's going on what would be referred to like Wall Street. You can look and see the market is normally what you would refer to as the S&P 500 or the Dow Jones Industrial Average. And for the S&P, you have a few very large companies that make up a huge amount of the equity in the S&P. So you have a few companies that are worth over $1 trillion. So in that sense, companies like Apple and Amazon are doing very well, and they're able to, by like a sense of virtuousness, bring up the rest of the market, where the S&P is a weighted average, if you're familiar with that term.
Yep.
Where it's not, yeah, so it's not, for the listeners, it's not like each company in the S&P gets 1/500th of a vote. Certain companies have a very large vote in how much they bring that up based on their market capitalization. I think the things to be aware of in the current market are, what are your tolerances for risk? You realize that the market, by most professionals' assessment, is very volatile and hard to predict the future for the best of professionals. And at the same time, you have the largest number of retail investors, meaning average people like myself and like yourself, that are just putting in $5,000, $50,000, $100,000 of their money for the first time. So you see this extreme volatility coming in on apps like Robinhood, where it's an app that anyone can use. And what makes it kind of crazy is you get these stock options that can be traded, where a stock option, for the most part, was designed to be used by a very nuanced professional investor, not like your average person. But it turns the market into, like, you know, where you might normally see like 5-10% swings in a day, there are stock options that you could lose 100% in 5 minutes, or you could make 1,000% return in 1 week. So there's just a huge amount of volatility in the market at the moment. And it's settling down a little bit, like it's leveling off. But I think that wherever you want to invest, the biggest advice I would give is invest in what you know really, really well. You know, if you're, and don't think that the market is the only place to invest. You can invest in the stock market. You could invest in real estate. You could, you know, Gary Vaynerchuk is huge on investing in baseball cards. You could invest in Bitcoin. You could invest in like this really wide range of like products and offerings. You could invest in, you know, the future of oil, which went negative a few months ago. But whatever you do, I think you should be investing where you really know. I'll personally probably almost always invest in myself, in businesses that I start, in things that I feel like I know well. Not to say that I don't put money into the market, but I think for the most part, the smart play with that is like, you know, kind of index funds where you're buying like SPY, which is just the aggregate of the S&P. And the reason I advise that is I think like I'm a relatively smart individual, but I realize that like I spend less than 5 hours a week analyzing the stock market. I also realize there are people, men and women, who have graduated from the top schools in the country that have spent 20, 30 years, 60 hours a week learning about the market, and they have better tools than I have, and they have better knowledge, and they have better access to information. So I try to stay in my lane and kind of invest and trade in stuff that I think I personally have an edge in. And that would be my biggest recommendation to anybody is, you know, you might know like Pokemon cards really well, or you might know it like, you know, there's so many of these like really weird things that are out there that vary in price that you could buy or sell. You might know silver prices really well, but I think that you should be investing in stuff that you know really well.
I like the Gary V references because I'm on it. I'm really into him. And he's helped me a lot as far as like changing perspectives. But yeah, recently I know he's really into the cards, like all sports cards now. But then his producer is into Pokemon cards and stuff like that. So like, yeah, I like the Gary V references.
Right, but if you take a look at Gary Vee, he's super passionate about sports. The guy wants to buy the Jets. He's got a sports agency under VaynerMedia, so he has like a really inside track as to who's doing what, and it's a huge passion of his. he's been aggressive with sports cards since he was like 10 years old.
Yeah.
So it's not like he's doing something different than what I'm talking about. This is him doing a deep dive into what he knows and believes in. Now, yeah, does Gary have like $250,000 in like Bitcoin? I believe he does. But relatively speaking, that's like spec money as I understand it. What I would recommend, if you have some amount of money that you want to invest, you want to be investing in what you know for like 95%. And maybe on 5%, you do what would be called speculation, which is, not being like a total deep dive expert, but like, I don't know, you think Ethereum, the cryptocurrency, is going to go from $400 a coin, which is somewhere where it's at today, to like $4,000 a coin. I'm not saying that's what's going to happen, but you think that. And so maybe you put 1% of your worth in Ethereum and you put 1% of your worth in something else that seems exciting and fun. But I would never really recommend speculating more than 5% of your portfolio into any asset class you're not really deeply involved in.
Yeah. Yeah, that again, that goes into like kind of what we were talking about much earlier when we were talking about gambling. Yeah, don't put any money into a gamble that you're not prepared to lose.
Exactly.
So Pat wants you to tell the story about how you and he got press passes for the Ronda Rousey fight. And also shout out to Ronda Rousey, longtime listener.
Okay, so this is almost like embarrassing, but kind of funny. So we were way younger. We go to this, the Arnold Sports Classic, and there's press passes that you have for the general event, but you need like some extra VIP sports pass to get back to the Strikeforce fight. So I go up to the guy who's like a young kid. He's like an intern who's watching the door. And he's like, I was like, yeah, like I'm here press for the Strikeforce fight. And he's like, who are you? And I was like, oh, Integrated Fitness, because that was the name of my company. And he was like, okay, like, I'm sorry, I don't have you on the list. And I was like, whoa, you don't have me on the list? Like, go grab your manager right now. And he's like, what? And I was like, this is clearly a mistake. Like, I just want to speak to your manager. Let's just get this straightened out. No big deal. And he's like, oh yeah, like, I'm really sorry. Like, this totally is a mistake. This is my bad. Like, let's not involve my manager. Like, I'll give you the pass. So me and Pat get these passes, and we go back there. It's like AOL, Time Warner, Showtime Sports. Like, it's like 5 or 6 like mega companies, and like me and Pat with like Integrated Fitness, like press passes, and we just kind of like, confidenced our way in. And I actually think we did a really good job reporting on the event. Like, we put up on our YouTube channel that I had, and it got like hundreds of thousands of views and everything. So like, and we were very respectful to all the fighters, and we got to meet like Ronda Rousey and like everyone else. But like, yeah, it was just kind of like, giving a little push to the kid. And it's just one of those things where it was very fun. And I think we did a good job, but it was just kind of like a confidence push through the door to, we figured that was the only way to get through. I mean, but it was so funny when we got backstage. It's like this very VIP thing with like, these real sports media reporters. And I mean, that had to be, I would say, like 10 years ago. So figure I was like maybe 27 at the time, 28. That was really fun. That was actually probably one of the most fun memories I have of like doing something fun with Pat. That was a good time.
Yeah, hey, it's worth going for, man. If you can make it happen, and there's no real backlash. There was no downside to it. The worst I could say was no.
Exactly. And I think, kind of the flip side of that just is once you're back there, like, all right, like, you got to do an awesome job, right? Like, you got back there, like, don't make someone regret that they let you in, you know what I mean? And like, if you can add a net positive value, that's how you get your foot in the door to get back the next time. Because yeah, you get lucky once or something and someone lets you in. And if you aren't well versed and you aren't professional, like, that's the end of the line. But realistically, if, we did a really professional job. We took it very seriously. Like, I interviewed somebody, I think like Pat held the camera or vice versa. And, we took it very seriously. We published it on our YouTube page, and it was pretty cool. So, I mean, I think there's a double-edged sword there where like, yeah, you kind of push your way through the door, but once you're in, you got to execute.
Right on. Well, so I kind of want to now like turn this a little bit to be kind of serious and about you a little bit. Um, so I don't like calling losses failures. I feel like losses are like higher in the ranking. Like a failure to me is more like not having the guts to try and potentially have to take a loss. And like a loss is having the guts to get in the game, be willing to square up with adversity, and walk away with a lesson, even though you may not have won. So like it's part of the recipe for winning long term rather than like in the immediate. So having a pandemic pull the rug out from underneath you to the tune of, you know, a 30 to 35 million valuation is a hard pill to swallow. Like with this virus slash like government induced recession situation being so out of that, being like so out of the ordinary, how do you as a person calibrate your mind to be able to gain a 30 to 35 million dollar lesson from it?
You know, I think the lesson that you gain from it is in part surrounding yourself with really good people. Where if you get caught up in the hype of like, I'm running a company that's XYZ size, or I'm like in a big city and I'm fancy, you'll surround yourself with the people that aren't going to be like good, genuine friends. And I think I was very, very lucky, from the girl I'm dating to my family to my friends, that like nothing changed of like, you know, none of my boys like stopped being my boys, like my girlfriend's still with me. And I think that's a really big takeaway from it, is surrounding yourself with good people that value you. I think the second step of a big lesson to take away from it is you got to be really keyed in on enjoying the process, and you always want the best outcome. But if you are only addicted to the outcome, or you're only outcome dependent, then it feels like a big loss. And look, this is a big loss, or it is a big lesson, or however you want to phrase it. And I don't take that lightly. I don't take the investors lightly. And that is part of it. But I don't feel that our team did something operationally that was broken or incorrect. This was a long tail black swan event. And so going back to what we learned, or what I learned, is, you know, you got to be doing things that you enjoy, because even you could do all the right things and, you know, sometimes things won't work out. But realistically, I had like a great team of people. I had an incredible amount of enjoyment from building the company. I was, myself or investors, everyone was very proud of what we accomplished. And, you know, something like that's really outside of your control. And so I think that just being honest with yourself that sometimes things don't work out and not taking it lightly, but also realizing that's not something that, you know, you made a mistake, or you were lazy, or you were dishonest. I mean, I think that's where I think people should, for anyone listening, if you have like a business that's that's going through a challenging time, you can't internalize that as you failing. I think that you just have to realize there are a lot of other people that are really great business people. And there are a lot of businesses that are like way bigger than mine that failed as well, like Neiman Marcus and Brooks Brothers, and like, you know, almost any business that's highly engaged in retail across the board is taking a big loss. So whether you're running a small business that generates $50,000 a year, or you have a big business, anyone listening just should be very aware that it's not a personalized failure given the situation. This is an outlier. And when you look at that, then you realize the things that matter: your friends, like Pat's a great friend, your family, the people that are around you. At the end of the day, like those are the things that matter. They're irreplaceable. And businesses, knock on wood, you can rebuild, you can make more money, but you really can't replace like people, or family, or friends, or relationships. So that'd be my biggest takeaway.
That's I was actually hoping that you'd kind of angle it in that kind of a way. Obviously having a good group of people around you, but also like to not internalize, especially, there are people that have failed because they just didn't do what it take. They didn't pivot when they needed to, basically. But like, this isn't really that situation. Nobody could have seen that coming. You calling it a black swan situation was perfect. That's how, like, I don't know how else you could say it to make it any more accurate. But yeah, I think that's more than insightful. It's dead on. Yeah. So I love that answer. So, what's next for you? You've kind of said you're working on your next steps. I definitely don't see you as a guy that ever kind of has his wheels not turning. So what do you have on deck? What's going on?
I'll just speak very, very lightly because we're in the really early stages of it.
As I assumed you might.
Yeah. I've always been a really big fan of like mixed martial arts, the UFC, Strikeforce, Pat talking about us going backstage. While I was in New York, I actually was really lucky and ended up getting to train Brazilian Jiu-Jitsu under Renzo Gracie of the Gracie family. So, for anyone that's not familiar, he's arguably like the biggest name in Brazilian Jiu-Jitsu. Or if he's not the biggest, he's one of the most well-known and also well-liked people. And, he's trained George St. Pierre, Matt Serra, and one of his black belts is Jean Donahar, who runs Donahar Death Squad. I mean, it's a very prestigious group within the organization.
Gracie's brought up almost every single time jiu-jitsu is brought up on the Rogan podcast. So if anybody watches that, it's like synonymous.
Yeah. So after doing about 2 years of training with them, I was training under a guy named Luca Attila, who's a black belt under Renzo and Renzo's business partner. And very long story short, I'm working on a business venture with Hollis Gracie, who's one of the Gracies, Renzo Gracie, and Luca Attila, where we're building a combat sport franchise. And so we're raising, we're going to raise some money, and we got a really kind of cool product that we're working on. It's a bit early stage to talk about it, but it's really cool to get to work with these people, and they're hard workers, they're smart, they're good business people, and they're just like, these are some of the toughest hand-to-hand combatants in the world, but they're also like just really good friends, really good people. And like, Hollis Gracie is this guy, he's like 6'5", 270, like beat Bob Sapp in a fight, if you know who that is. Yep. He's like one of the nicest human beings you could ever imagine. I would not want to be on the wrong side of him because, I have no question what he's capable of. And the same with Luca and Renzo. I mean, these are all really, really high quality human beings. So I'm excited about that project. And once we get a little farther along, I'd be very happy to talk more about what we're doing when we get to a later stage.
I'm massively intrigued. If you hang on after this, I'd love off the record. I'd love to hear more about it.
Yeah, sure. Happy to talk about that a little bit more.
Right on. Well, okay. I think this is like the home stretch now. So we like to wrap these up with like you being able to directly interact with the people watching. So you get to ask people listening anything you'd like to know from them. So what's on your mind that you'd like to ask the fine humans watching?
Oh, that's a really good question. I don't know. I mean, I just think, what are they most passionate about? Like I think whatever people are the most passionate about in their lives, what gets people excited?
Which I wonder if that's come to the surface for people a lot more in this whole scenario. You're locked in with yourself. You probably don't get a lot of time to think if you're a parent or whatever, like just because of like the amount of attention they're giving their kids right now. But like, if you're somebody more like me that's single in his own place, has a lot of time to kind of like mull through his thoughts, I figured out a lot of things during this. So that would be an interesting thing to hear if anything new has kind of, or if like somebody is like dawned on something where like, this is what I'm really passionate about. Like what I leaned on to get me through this situation is, you know, probably one of the things that they're most passionate about.
That's exactly right. And I think what you're going to see, hopefully, when we get to the other side of this, is you're going to see like a bifurcation of two types of people. You're going to see some people who took this time and like did a deep dive into their soul and learning and growing, and they're going to come out of this thing 10, 20 steps ahead of where they were when they went in it, because you have so much time. And I think you're going to see another side, which is people that just kind of hung out, which isn't necessarily a bad thing, but they might not be as far along. And so like for me, like I've been busy, right? Like I'm writing a book, and
Very cool.
I got accepted into like a executive program at like one Ivy League school. And I got accepted into like an online executive program at another Ivy League school. And it was really interesting because one cost like $5,000 and the other cost like $75. So that was like a very easy thing. But I ended up getting like an advanced game theory degree or certificate from like Stanford, right? Like which was really cool. Like I learned a lot there. So I mean, I think that, and like thinking about like how important my family is, right? On the flip side of it, and I try to have like, I mean, I talk to Pat very frequently, but I try to talk to like a lot of my friends on the phone because you don't get to see them as much, and you just realize like, you know, how important it is to maintain those relationships. So I mean, I think to anyone out there, I mean, just think about what you're passionate about and being engaged and having fun with it, because that, to me, that's what makes life enjoyable, is the things that you care about.
Yeah. Yeah. I've been doing a lot of this. You know, there's people, some people are not taking this very seriously. And then there are some people that are the exact opposite end of the spectrum, are taking it super seriously. And this is basically the Zoom interaction is like the best I got to be able to talk to them or on the phone or whatever. But like, it's always nice to see somebody if you can. But yeah, I mean, you're 100% right. So what are you most passionate about, so that people can actually respond to you and tag you and whatnot? Lastly, tell the people where they can reach you, your website, social media, all the things.
Oh, okay. The easiest way is probably on LinkedIn. I'm, like you said, you figured it out very quickly. I'm very active on there. Josh Bobrowsky at LinkedIn. That would be the easiest way to get in touch. But aside from that, I've got Instagram, again, Josh Bobrowsky, Twitter, Josh Bobrowsky. I'm not really original with my name, you know, so.
Consistency is key, man.
Yeah, it's consistent cross-platform branding. Yeah, what I'm passionate about, I really like helping people. I think that's like one of the best things is if you're lucky enough and to have some levels of success, if you can help other people get there, or you can, you know, help somebody else. It doesn't have to be, you don't really have to be super successful. It can be like a really micro thing of just being kind, or a smile, or like little things, especially right now, it mean a ton. And being self-aware, I think, is really big. And just like right now when tensions are high, just like being patient and realizing that, you know, you don't know what someone else has going on. Like, you know, someone might be really mean or nasty, but like maybe they're having like a loved one that's super sick, or like maybe they've got like some crazy thing going on that you have no idea about. So just, you know, trying to give people the benefit of the doubt and just like helping people out where you can.
Yeah. Yeah. I mean, I couldn't agree more with that. And just with the state of everything right now, just a little bit of slowing down, a little bit of patience, man. If you haven't learned patience right now, I don't know what else you could possibly learn. Like this is the biggest waiting game that anybody's had to do.
Yeah. I mean, I think that's just, patience is a good thing. And
Always.
just, you know, just, I like listening to people, man. I just like listening to what they have to say. There's a lot of smarter people out there than me, and like hearing their perspectives. And I just think that's important. Being patient, listening, being kind. I mean, if you can do those things, I think you'll get a lot farther than it being like self-interested. And, I can actually tell you a story that's like a really good example of me not being patient and kind. When I was moving out of New York City and we were moving out of my girlfriend's apartment, like I dropped my girlfriend off for her to move out. And I was like, yeah, I'll drive around and I'll find a spot and then I'll come upstairs. And, you have a doorman in New York City and an elevator and everything like that. So I drive around for like 45 minutes or an hour and finally find a parking spot. And so like already I'm like kind of annoyed. And then I call her, and on her phone, she like didn't pick up, and she was upstairs, but she was like, I guess she was like cleaning a bathroom or didn't have the phone with her. It wasn't really her fault. So I go like the doorman. I was like, okay, my girlfriend's up there. She just came in. This is what she looks like. Let me up. And he was like, no. And I kind of like wasn't as polite as I should have been. And so I was like kind of mad. He wouldn't let me in. Then I took a step back and I realized like, yeah, I'm not mad at the doorman. This is really me being a person that's not acting the way that I should. And, my girlfriend ended up coming down. And I went to the doorman after, and I was like, look, I get it. You did the absolute right thing. Here is like a girl by herself. You've never seen me before. You're being protective of her. I was frustrated because I was driving around. I gave the guy like $20, and I was like, look, I was far in the wrong, and you dealt with my shit, and you were absolutely in the right, and like protected the building. And that's like the most you could ask of someone in your role. And so then the next day, like I needed to find a parking spot, right? And I'd already gone through that hour, and you spent like $50 parking in New York. And I guess the security guy overheard me, and like he appreciated that I admitted I was not correct in my actions. And I think the $20 meant a lot. And he's like, yeah, there's this like secret spot on the side of the building that I can let you park in for the day. Like, it won't cost you anything. I'll just put you there. And, I just thought of how very professional he was in handling that situation. And just like realizing from that, like I was heated because like I was annoyed with driving around, and like this guy was doing his job. And like, I hope I made the right pivot to, instead of being like upset and like showing my appreciation for what he did. But it was just such a great lesson of like how easy it is to be so stuck in your own head and not realize where the other person is coming from. That was just like a great example of where I was not correct in my actions on that day.
I feel like that's like two decent interactions that happen back to back. You show humiliation.
Humiliation.
You showed
No,
humility. You showed humility, and he showed appreciation, which is why I got to humiliation. If you match those two together.
No, my actions were not something to be proud of at first, but no, I think you're exactly right. And that was just a good lesson on both sides, right? Like you can be a little bit in the wrong, but you can course correct a little bit and, do a little bit better. And so, I think it was a great lesson because like, if you've ever been to New York City and like, we just moved out of one apartment, and it was like a really long day. Right. But, in that moment, I realized like, that guy has no idea what I'm dealing with. I just come into the building, and he's living in his world, and he did a great job, right? Like that's the best thing you could ask of a doorman, is for them to do their job, which he did really well. So that was a lot of it was a good learning lesson of just like continuing to remember to be patient even when you're kind of frustrated.
Right on. Well, I think that's a pretty amazing story to like end this on. So like, let's not mess it up with me mashing two more words together that are terrible. And thank you so much for taking the time. There's so much, you spout off so much information, just like it's casual knowledge. It's impressive. It's impressive, but thank you for taking the time.
Thank you for having me. Look, this is your time. This is your podcast. I'm just happy to kind of be on your show. This is very, very cool of you to take the time to spend with me. I appreciate that.
Well, I appreciate that as well. So, man, stay safe. Keep doing what you're doing. I love your mindset. I love your drive, and like I'm gonna be keeping up on you. So, I don't know. Let's just be in touch for that.
That's awesome, man. Thank you.
All right, man.